the TheoTrade. This is Don Kaufman. March 8th, 2021. Doing the TheoTrade update here. About 20 minutes ago to the cash close. S&P's massively unchanged on this Monday afternoon. But, well, big tech, once again, taking some big losses. Nasdaq is down to the tune of about 2%. I know a lot of people are obviously going to point out, the stocks that are the weakest in here, which inevitably will bring us to none other than Tesla. Got to tell you, though, Tesla getting a little bit of a bid under it right now. We'll see how it closes. Nevertheless, Tesla is not necessarily what is on the menu today. This is what I want you to look at, Google. Why? Google has remained completely and totally unscathed. Google coming down to right around the 2,000 level is going to test the entire marketplace, because if it's not for Google holding up in this most recent tech sell-off, well, the Nasdaq would be down considerably more. Again, in the days to come, key into some of the tech stocks that have been extraordinarily strong, throughout some of the sell-side activity. If you take a look at some of the monsters of tech, now the monsters of tech, lo and behold, are like Microsoft, obviously they're Apple, Take a look quickly at Facebook. Facebook also holding relatively tough, seeing some sell-side activity. The point that I'm trying to make on this particular front is, yes, some of your tech stocks have taken decent size hits. Nevertheless, what's going on right now is that trade is starting to rotate and hit some of the tech stocks that have not yet actually seen sell-side activity. Their breakdown would signal a much more substantial and duration move inside of the Nasdaq. Now, just because we're seeing Google have a decent down day, listen, we saw that, 3 trading sessions ago when Google actually touched into the 2,000 level. But this particular move looks a little bit more severe. Now, in saying that, and yes, the S&Ps right now are unchanged. The Russell is up substantially. Let's actually pull back for a second and show you the damage that tech is capable of inflicting on the broader marketplace. And to do that, I'm actually going to cruise over specifically to visualize. This is the S&P 100. Now, I spend quite a bit of time describing this because I think a lot of people don't realize, when was the last time you saw the advanced decline line? I mean, that's not exactly stellar, all right? But you have 74 stocks trading to the upside inside of the S&P 100. Nothing matters right now. Nothing matters, and the S&Ps are about to actually cruise negative on the trading session because it's the Nasdaq, right? And because these are, quote unquote, the monsters of tech. Now, I'm going to make a quick argument, all right, about this, and this is for the future of, this trading week. This bifurcation will not stand, all right? And this is something that I was mentioning on the weekend update. It's something I mentioned last week. When I say the bifurcation will not stand, all right, what I'm actually referencing is you need to see correlation hit this marketplace for capitulation to take place. I'm going to say that again. You need correlation in the marketplace, for the marketplace to turn around and actually capitulate. Now, I'm not saying, that big tech can't turn around and have a couple of nice up days out there, because they absolutely unequivocally can. Right now, we're just playing this rotation game. But for the marketplace net to get out of this kind of crazy volatility stance that we're in, you really want to see a trading session when you have like 90, 95 products trading to the downside. And quite frankly, not only aren't we anywhere near that, we're still in a wildly bifurcated marketplace. And that bifurcation, hey, take a look, we're still buying financials. Now, lo and behold, this is one, of many of the short positions that I happen to have on. Yes, I have short positions specifically in tech. In fact, here, take a quick glance. You can see I'm outright short Apple. Short a little bit of Facebook. Short some FedEx. It's a party, people. Short a little bit of NVIDIA in here. I know. Everything in a partridge in a pear tree. But I've also stepped in, and it has been a formidable position to be short right now inside of the financials. I'm also carrying a small short position inside of the energy sector. And these two sectors, okay, for the S&Ps to subside, for the S&Ps to really start to see some sell-side activity, those sectors have got to roll over. What's going to drive those particular sectors? Well, obviously, the bond trade. Okay, at this point, there's just been massive sell-side activity inside of the bond product. Now, I'm not going to spend the entire session here in bonds, but I will make a very, very brief argument at this point for the fact that bonds selling off right now is being viewed as a positive for financials. Okay, if the bonds continue any real sell-side activity, okay, that I believe that that is going to be implied as a huge negative for the financials. And if you're kind of curious as to why, it's quite simply this. If the bonds continue to sell off, it's likely to actually spark a little bit of fear on the behalf of the Fed and Jerome Powell. They may step in and do something. They're not going to call it yield curve control. They'll probably call it something like the twist program. But if the Fed steps into the bond market, okay, in effort, again, to bid the bonds back up, which is precisely what they would likely to do to keep those interest rates relatively low in the longer durations. But if the Fed steps in, it literally like wipes an asset class away from the financials, and it could be devastating to the financials. Hence why I continue to sustain short positions in the financials, and again have a lot of belief in that particular trade, at least for the time being. With that being said, on a year-to-date basis, you realize the financials are up 18% year-to-date basis. This is a sector, okay, that could not get out of its own way. All right, what? Just take a quick glance back, less than a year ago. All right, with that, let's move onward and upward. So the advanced decline line is troubling to say the least. The fact that the financials and the energy sector continue to be incredibly strong is also, you know, very, very difficult. As I was saying, the monsters of tech. Now, the monsters of tech, that's that conglomerate symbol that we built, is seeing some sell-side activity. But let's put everything in perspective. When you start looking, okay, at the monsters of tech, and, you know, more appropriately, let's take a quick glance at the Nasdaq. And here's a year-to-date percentage. Obviously, the Nasdaq is down over about 2% year-to-date basis. But there is something also a little bit troubling inside of the Nasdaq that I don't necessarily think a lot of people are looking at, and that's this. We're actually going to cruise over to studies, and I'm going to make this as clean as I possibly can. A study that each and every one of you can pull up, and just pull up implied volatility. Forget about any crazy studies I'm going to use. Just do me the favor and pull up implied volatility. So looking at this implied volatility, this is equivalent to the 30-day implied volatility inside of the Nasdaq, and it's bid up, and it's bid up to the tune of about 34%. But the point of me bringing this up, and I actually want to bring this up for like the last 3 years. The point of me bringing this up, yeah, volatility has been elevated ever since we've been, you know, the COVID crash, and, you know, literally all of 2020 and into 2021. But the bid that we're seeing in volatility, to me, kind of lacks. And that, I'll tell you right now, it just doesn't make me feel all warm and fuzzy inside. You know, and again, it's tough to compare what's going on right now to anything that happened, you know, in years past. But for sell-side activity, and again, sell-side activity here inside of the Nasdaq that's become corrective in nature, okay, I got to tell you right now, are you feeling the fear? All I feel is people trying to come in here and buy the dip on a day-to-day basis. And that could be futility. I do not like at this point in time, okay, the lack of pressure into the QQQs. And I'm gauging the lack of pressure. Like, listen, I could see the volume is actually bidding up in here. It's, you know, some wild volume, but I don't feel the fear in there. Okay, I'm not feeling, when I say feel the pressure, I'm not feeling the volatility. It's not exactly taken off. It's not taken off really anywhere in here. I mean, we're in corrective territory, and we're just, all right, the volatility's come up mildly, okay? We're still taking a little bit of a nap. Now, when you look at other products like the IWM and the IWM, this thing has been Mr. Toad's wild ride. I could probably make a similar argument and take a quick glance. All right, we're going to go add studies, volatility studies, cruise up to implied volatility. All right, we'll zoom out for just a second. I want you to see this as well. All right, the volatility inside of the IWM is pretty much kind of at par with what's going on inside of the QQQ. Once again, all right, this is a product that's thrown off some just wicked range, you know, on a day-to-day basis, even though it's bid up today. Again, volatility kind of lacks. Now, I'm telling you, these are signs to be cautious around. Okay. And the reason I'm saying that is not expressly to make like, oh man, we're going to sell off a little bit. Okay. It's not if we're going to sell off a little bit. It has nothing to do with that. Okay. The reason I'm bringing this to your attention, because a lot of people don't necessarily look at implied volatility and recognize like, hey, maybe this is okay. The 10% correction happened. It's safe to get back in. Yeah, maybe. All right. But usually when corrections happen, people feel the fear. When they feel the fear, the implied volatility skyrockets. And right now, that is not going on. And I don't feel warm and fuzzy. Okay, so when I say I don't feel warm and fuzzy, listen, you still have the bonds selling off. As I said to you, as long as those bonds continue to have this degree of volatility, as long as the bonds continue to sell off, there's going to be pressure towards tech. On top of it, come on, we're nowhere near correlated, right? So there's no correlation. We're wildly bifurcated. What do? This is buy the financials, man. It's something we can buy right now. I mean, you have these asset allocators that are just trying to stuff capital into places. That's not sell-side activity. That's not even close to sell-side activity. Sell-side activity, everybody feels the fear and starts to do what? Correlate in the marketplace. Last, but definitely not least, lo and behold, credit market is actually still displaying extraordinary degrees of risk. And again, this is the CBOE interest rate swap volatility index. Right? Well, and once again, it doesn't exactly make me feel warm and fuzzy that there's something going on inside of the credit market that has not reared its ugly head. We'll finish with the idea that the S&Ps right now are, for the most part today, going to end unchanged. There's only 10 minutes left inside of the trading day. We have a $100 expected move, okay? But we just passed through an entire trading session, yet the expected move didn't really back off. Now we're at an $87 expected move. Okay, keep your helmet on, people. But I'm telling you right now, you're going to see a 100-point move this week, higher or lower. It's pretty much a given in here. So get ready for some volatility, okay? Get ready for the idea that we have to see degrees of correlation. And lo and behold, if you think you've seen some volatility, you haven't seen anything yet. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.